Crypto platforms have been falling like dominoes this year. With one dropping after another, are we past the point of no return? It all started with the collapse of crypto prices, which brought the total cryptocurrency market cap down over 70%, a loss of $2 trillion in value. On May 7th of 2022, the first domino began to fall. In less than a week, Terra Luna, a $41 billion crypto protocol, collapsed to zero. This started the chain reaction. Three Arrows Capital, which managed nearly $10 billion in early 2022 and had a major Terra Luna position, filed for bankruptcy. The next dominoes in line to go under? Crypto lending platforms Celsius and Voyager. The web of crypto platforms with exposure to each other fell one after another. How could it possibly get any worse? Here's how. In November of 2022, the contagion reached its way to FTX, the second largest crypto platform globally. In what may be one of the largest fraud cases in history, FTX's founder Sam Bankman-Fried was exposed for funneling billions into his trading firm, Alameda Research.
What does warm mean?
Oh my gosh, try to get the door.
Not about... Jeez!
FTX filed for bankruptcy, and now millions are at risk of losing their money, with many having their entire savings in the platform.
Like I was saying, it's FTX. It's a safe and easy way to get into crypto.
I don't think so. And I'm never wrong about this stuff. Never.
Investors are swearing off crypto, and the industry is being heavily criticized. I lost 100% of my deposit in FTX. I will never be able to make this back again. I think I will leave crypto for good. Surely this must be the end for crypto, right? Is it time to write the obituaries? In the past 12 years, Bitcoin, the world's largest cryptocurrency, has been pronounced dead by the media over 400 times. But oddly enough, it's only been deemed dead 27 times in 2022, far from the 124 times in 2017.
In the first place, it's stupid because it's very likely to go to zero.
Has the domino effect taken its hold? Or is crypto here to stay? To answer that question, we have to go back to the past. Let's go back to 2013, when Bitcoin was trading at under $100. Mt. Gox was the dominant crypto exchange at that time, and within a year, Bitcoin soared past $1,000. The industry was partying like it was 2021. But trouble was brewing behind the scenes. For years, hackers had been stealing Bitcoin from users without them or Mt. Gox even knowing. Mt. Gox discovered the theft in 2014 and immediately stopped withdrawals. By then, hackers had stolen nearly 840,000 Bitcoin, and Mt. Gox filed for bankruptcy later that year.
Bitcoin, the Mt. Gox Bitcoin exchange, filing for bankruptcy this morning. Its CEO saying over 750,000 Bitcoins are unaccounted for, and that's worth about several $100 million. The CEO of Mt. Gox announced the news on Japanese TV. He apologized, bowed deeply for several minutes straight. This is his first public appearance since rumors of insolvency at Mt. Gox had surfaced last month.
Employees later painted the picture of a company that was disorganized, had poor security procedures, and many operational issues. Sound familiar? Nearly a decade after Mt. Gox imploded, investors still don't know if and when they'll get their money back. History has shown that each crypto cycle has had its own set of bad actors, bankruptcies, and victims. In 2018, the Canadian crypto exchange Quadriga went under, and Canadian authorities ruled it a Ponzi scheme in 2019. Only $46 million was recovered from the $215 million owed. As you can see, the crash of FTX wasn't the first of its size, and until proper regulation is implemented, it's possible it won't be the last. Why doesn't this happen with stock trading brokerages? Unlike other parts of the financial industry, the US crypto industry lacks proper regulations. While regulation sounds scary, it could benefit the industry and push it forward.
We believe very strongly that regulations are good for this industry. Right now, crypto adoption is probably around 5%, probably 400 to 500 million people around the world have crypto. Those are the early adopters. For the rest of the 7.5 billion, they probably prefer some kind of a regulated entity with more structure.
A Bloomberg survey showed that investors are more willing to invest in crypto if there are more regulations.
There's a real need for more appropriate regulation so that as DeFi expands and starts to touch more and more retail customers and that sort of thing, so that appropriate regulation is in place.
The industry has been pushing for regulations for years. But why is regulation needed? Take the heavily regulated stock market as an example. Fidelity wouldn't be able to take your deposits and lend them to a separate company if regulations weren't in place. Proper regulations could have helped prevent some of the practices that Sam Bankman-Fried engaged in, like mislabeling customer accounts. Here's what industry veterans have to say. According to the CEO of Coinbase, Brian Armstrong, the problem is that the SEC failed to create regulatory clarity here in the US, so many American investors and 95% of trading activity went offshore. Here's Jeremy Allaire, CEO of Circle. The lack of a clear and sound regulatory framework for US crypto markets has left people exposed to the supervisory powers of the Bahamas and who knows where for others. After FTX blew up, lawmakers from all over the world began calling for crypto regulation. But it's uncertain in what form those regulations will come in, or when they'll come.
Reports also say that the bill would force all locally active crypto providers to have a physical entity in the country, with fines and even prison sentences for those breaching the new rule.
To compare FTX with the rest of the crypto industry isn't entirely fair. FTX was largely a result of bad actors and mismanagement, enabled by a lack of regulation. Centralization also led to the fall of FTX. One of crypto's key benefits is transparency, something that's lacking in the traditional financial system. Blockchain transactions are recorded on a public ledger. If you have someone's crypto wallet address, you can see what's in their account and where transactions are going or coming in from. But if crypto is supposed to be so transparent, how come FTX customers didn't know where their funds were? That's where decentralization comes in. In a decentralized organization, there is no single point of control or authority. FTX was the opposite. They were a centralized organization that took complete custody of your funds, giving them full control. This allowed Sam Bankman-Fried to move your funds wherever he wanted. And that's exactly what he did, legal or not. With a decentralized exchange, there is no custody. You hold your crypto inside your own wallet. When you want to sell, buy, or swap crypto, you connect your wallet to the decentralized exchange to make a trade. Decentralized exchanges are run by pieces of code using the blockchain. Everything is transparent. Instead of trusting humans, we're trusting code. Unless someone accesses your wallet, your crypto can't be stolen. Decentralized applications can be hacked, but the underlying code is getting stronger each day. And decentralized exchanges and cryptocurrencies like Bitcoin and Ethereum are working as intended. FTX's collapse was a result of a few bad actors working nefariously, something that decentralization could have prevented. After the hack, investors began to withdraw money from centralized exchanges in masses. Trading volume on decentralized exchanges doubled with massive capital inflows. Blockchain data firm Chainalysis argues that the crypto industry has survived worse than the fall of FTX. Objectively, FTX makes up a smaller portion of the industry than Mt. Gox held in 2014. Before collapsing, Mt. Gox averaged 46% of all exchange inflows. But according to Chainalysis, FTX could have a bigger impact on confidence in the industry. In 2014, crypto was mostly known to early adopters and enthusiasts. Today, retail investors are much more exposed. Crypto has become more mainstream with wider media coverage. So where will crypto go from here? No one can say for certain, but here's one likely scenario. Venture capitalists will continue to invest in the space. Entrepreneurs will continue building, and regulations will eventually be put in place. Yes, it'll take time for the space to recover, and it could take years before the industry regains the confidence of investors. After Mt. Gox's bankruptcy, it took nearly 3 years for crypto to break new highs again. And the cycle continues.
It will be until end of 2024 to the beginning of 2025 that we can welcome the next bull market on Bitcoin.
The fall of FTX will slow crypto adoption and innovation, but eventually, new companies will be created, each one learning from the mistakes of the previous cycle. It's too early to dismiss crypto, and yet, it may be naive to believe that this time will be different. If you enjoyed this content, subscribe to our free 4 times weekly newsletter that covers investing trends, news, and analysis. It's called The Average Joe, and it'll help you become a better investor. Concise, informative, and only takes 5 minutes to read. Subscribe for free using the link in our description or head over to readthejoe.com. Thanks for watching. Let us know your thoughts in the comments below, and we'll see you on the next episode of The Best of Investing.